So we've seen a substantial change in the reaction function of the Chinese government. Over the summer, there was some disappointment for equity market, where the focus was really much more on the national security than on the consumer. We've seen that this has changed at the end of September, where the Chinese government has really emphasized that it wants to help the consumer. And that will have direct feedback into European equities, especially the China-related and the consumer-related stocks. At the moment, we haven't seen really that strong outperformance of European stock on the back of that stimulus. And I think one of the reasons for that is that in the past, there's been some disappointment on the back of some measure announced by China that was not thought through the whole economy. So I think the market is expecting to see what is the fiscal measure implemented. Are we going to see that boost throughout the economy on the monetary and on the fiscal side? And also around the US election, I think there's still some worries about what the result of the election would be and what that means for equity market. And then we see a path actually for equity to reach 5,300 within the European Union.
Do you have strategies for European stocks, around the US election? So obviously we know a lot about tariffs, or we've heard a bit about tariffs from former President Trump, and we know he has plans in that regard if he is elected another time. Do you have strategies that will that play around the election? Because some investors want to look through this and sort of set it to one side, and others want to be actively involved.
Yeah. So what we've noticed is that there's a typical pattern going into the US election where the months leading into the US election, you have an underperformance of the stock market and you have a vol that gets bid. So you have this seasonal pattern. Basically, some manager, they take some chip off the table, reduce their risk exposure, leading into the US election. And then once we've got the result, market can deal with that certainty. They know who's the candidate, who's the president, and then market tends to perform better. So that's kind of the roadmap that we're having going into US election. Potentially some weakness ahead with vol getting a bit more bid, and then stronger reaction after that. Now, as for the candidate between Harris and Trump, we will still have to see what the exact program that would be happening. But I think the idea around Trump will be more positive for US domestic assets, a bit less positive maybe for European assets, so maybe some cyclical underperformance in Europe. Whereas on the Harris victory, you could have outperformance of European stocks versus US stocks.
Good morning.
Well,
big vol spike in August. Moderate vol spike in September. Get up to around 20 on the VIX. We're kind of 20 now on the VIX. As you see how the rest of this month unfolds, does vol go up or does vol go down? Does the VIX go up? Does it go down?
So our message has been to be buying some vol on the dips. So we're saying that volatility is likely to remain flawed around current level because there's just so many catalysts ahead.
Okay.
We've got the US election, but we've also got the macro that is at this inflection point. We've got the earnings season that is about to start tomorrow in the US and then next in Europe. So we have all of these catalysts. So we think that the higher vol levels are reflecting this wall of catalysts that we have, with the fact that geopolitical tensions have risen over the past few weeks. So we think this is warranted by the outlook that we're seeing for stocks.
Do you think there is still this view in the market, though, that you want to be short vol?
I think ahead of the election, that would be really tricky to have. And I think that the discussion that we're having with people around the street is that ahead of the election, you really want to keep that cautious stance, especially with geopolitical tension where there's still risk on headwinds.
What could it unfold? August, the vol spike was big, really big. Could we go back to those kinds of levels around the election?
It's not exactly the roadmap that we have in mind. This was really also a question of low liquidity that took everyone by surprise. Sure. There was like the unwind of the carry trade. There was really a lot of things happening, and that kind of led to a real spike in volatility. Also, the VIX level at 60, that was more a reflection that the bid-ask was so huge on that price. It doesn't mean really that people traded around that price. So this is not the roadmap that we have. But still, we're saying it could be really the case that this stock goes around 25, 30 is more the level that we have in mind. Most than the spike at 60 like we saw in the August sell-off.
Okay.
What's the hedge then? If you have these views on volatility, what is the hedge to navigate the next 30 days?
Yeah. So what we saw looking at previous election, the 2016 and the 2020 election, is that actually if you want to play the election, it was more interesting to play, let's say, a straddle. You don't delta hedge it, because what you tend to see is that vol gets bid ahead of the election, but it doesn't necessarily realize after the election. So you want to have that view, not so much on the delta. You don't want a delta hedge view. You don't want to hedge the vol view, but you want to have that position because stocks tend to trade in one way or the other. They have strong directionality, not so much close-to-close market volatility. So you want to have that delta, that straddle, but no delta hedge.